Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, August 11th, 2011 is brought to you by Realtek. Alright guys, let's get right into the mix today. Market's having a monstrous rally. Dow Jones Industrial Average up over 300 points, NASDAQ up 85 points, and the S&P 500 up 37, basically 3% plus across the board on the Dow, NASDAQ, and S&P. You can see the markets are pulling back a little bit right now, but that's after a monster move up. Look at this move up, and by the way, we nailed this across the board, folks. Yesterday, even when the Dow was down 500 points, I kept on telling my members in the Research Center, in the intraday stock chat, I said, listen, guys, as long as you don't take out this pivot low from last Tuesday, which was 2 days ago, this pivot low right here, the bottom is in this market, and you expect the market to move up. I don't care that the Dow was down 500 points today. That means nothing. Why? Because you never took out the pivot low. This is something that, again, most people have no concept of because they get involved with the emotion, the fear of the markets. Ignore it. It will get you into trouble. You will lose money. That simple. What you do is you look for the pivot low right here. This was a bottoming tail on the daily chart. The 700-point increase in the Dow is right here. Yesterday, all it was an inside bar. That's all it was. Just an inside bar, which is bullish consolidation. As long as it didn't take out this pivot low, it's still in there. And that goes for the future as well. As long as you do not have that low taken out, it's basically every pullback's a buying opportunity in the short run here. All right, now obviously we're long. We've situated ourselves long over the last couple days, so obviously we're not going to be going long up here now, but nonetheless, that's the key, folks. You got to understand how to play this stuff. It was so crazy. I was watching Fast Money last night, and all they're saying is stay out of the market, this could go bad, blah, blah, blah. Yeah, okay, maybe 1 in 10 chance of it, but bottom line is, they should have been telling you, listen, as long as this pivot low holds, the market is a buy right now. If it takes it out, then you stop yourself out for a small loss. Of course, they're not saying that. And they're just perpetuating the fear and the panic and making people get out of their positions at the lows, which ultimately is exactly what the institutions want, exactly what the big boys want. I'm here to try to save that, try to save you. Ignore that nonsense. All right, guys, you have to know how to read the technicals. Yesterday, all it was an inside day. Yeah, was it a big down day? Sure, but when you have a 700-point up move, 500 down is still inside. Yeah, it's crazy. I know that. But it's still inside. And the buying opportunity, you could have gotten things so cheap yesterday, even in buying at the close here. Look at the move up today. By the way, you had a triangular pattern here as well, talking about technicals. Take a look. Connect the pivot low from that bottom, connected to the pivot low yesterday. That's your low. Connect the highs from the top here to the highs from yesterday. Look at what you get. I put this on the chart. It's a triangular pattern of consolidation. See how you're chopping in here? You move up, you close above. Notice the consolidation. It takes you consolidating. You're above. This is a breakout, guys. This is a breakout. You're above it. You're consolidating in a bullish manner. This is up move, sideways consolidation. That's bullish consolidation. There you go. Pop to the 200. Pop to this little pivot line. By the way, where's that pivot line coming from? Pivot low right here. That's the resistance point. There's your another resistance point. And again, right to that point, which happens to be the 200 moving average as well. Now, having said that, we also have to watch where this market closes. In my opinion, you must close above this orangish trend line and above the blue area. So somewhere, really, I need this market to close above 115.40. Ideally, even above 116.30 would be even better, but in the very least above 115.40. You close there, you should see continued upside. If you close above 116.30 right here, which is this pivot high from yesterday, and which again we're kind of right on right now, you can see we're trading right in that vicinity, then I think there's even more chance of upside tomorrow. If you close below that 115.40 and you sell off late in the day here, which is always a possibility because people don't want to hold into Europe tomorrow, well, then it obviously could go back down. But ultimately, as long as this trend line holds on the downside, which is going to creep up and up, this low pivot is the low pivot. And again, even if you come down there, the market is not a breakdown market. You do not dump your positions until that gets taken out. All right, and I know I get exacerbated and a little emotional and kind of crazy about this stuff, but it just drove me nuts. I could not believe it. In fact, I respect the Fast Money crew. They know what they're talking about. They're good. But you have to look at the technicals here and to not really talk about this pivot low as being a 700-point move, as being a reversal signal, and even though you were down, you didn't take that low out. You have to say that. You have to tell people. Because when you're saying stay out, you could have bought yesterday so easily and made so much money. Even buying at the open today would have been all right. Look at the move up. All right, we'll watch what happens the rest of the day, guys. Let's take a look at the dollar. UUP is up a penny on the day. You're still seeing a little bit of jitters out of Europe. That's not a surprise to me. The fact is, it's not going away, the whole European issues. The only thing that's kind of getting, relaxed is the fact that some of these banks that were thought to be possibly in major trouble are not in major trouble. Even a newspaper over there came out and said, we apologize for saying that, SocGen was in trouble, which I think was key to kind of calm nerves. France is not getting downgraded as of now in terms of their debt credit rating. Who knows what happens in the future? But, I mean, it's a calming down a little bit. That's why you're seeing this rally. The question is, can you have a continuation rally? All right, and again, if you go back to the spiders and I go to the daily chart, by the way, this master level held. Look at this. I told people in the research center a couple days ago, I said this 112 to 111.30 level, this is your pivot low on the daily chart. If you close below here, you probably dump to 104.50. See, there's nothing between here, and look at how it held. So again, it's all about technicals. Again, people in the research center, people in the chat room making money. One of the greatest trades here in the last couple weeks was TBT, folks. Nick put out a long trade on TBT at $25.75 to $26. Today, the auction was actually pretty horrible, which causes rates to go up. And look at this move on the TBT, which is an ETF that tracks the ultra short 20-year. And look at this pop. And we took half off the table here at $27.40. Which was a beautiful move. We have a break-even stop now on this, half off the table from $25.75 to $27.40. I mean, that's basically almost 10%. Not quite 10%, but almost 10% just in a couple days. Now, again, half off, break-even stop. Enjoy it. That's another winner right there. And we're back on the winning track. All right, that's the key. It's always about stringing winners together. Yeah, occasionally you have a loser, no doubt about it, especially when the market crashes like it did. That's just the nature of the beast. But it's ultimately, can you get back right away? Many people are too scared. I thought the Fast Money crew was probably that yesterday. They probably saw the writing on the wall there. I mean, or maybe they didn't. I hope they did, considering they're, decent at their jobs. But did they have the guts like I did? Yesterday, I stuck to my guns. I said, listen, I'm just looking at the technicals. I'm not letting fear get into my focus here. Ignore emotion. What do the technicals tell us? This is what they tell us. This is what we believe. Bam. All right. Gold, great sell-off, folks. Great sell-off on gold. One thing I've said is that if gold falls, markets will go up. They're inverse to each other because it's fear-related. It's 100% fear-related. Gold is down. The GLD is down $4.46 right now. Beautiful little dump there. You may have a short-term bottoming tail here, but nonetheless, I wouldn't be going long gold. I was calling for a short this morning on a gap up. Even some people took it yesterday when I was mentioning it in the intraday stock chat, and that was really the play. Yesterday, shorting it upwards of here. Nice move down. I think it goes even lower, although I think there's probably only another $5 down, maybe $5 or so before it gets a little bit of a bounce. Remember, even though we may recover, even though the bottom is in, it's not going to be an easy bottom, and it's not a long-term bottom. I want to make that clear. I don't think it's a long-term bottom. I think it's short-term. You're going to get a bounce up here for a couple weeks, maybe choppy, and it's going to be choppy. It's going to be up, down 200 points a day minimally, maybe 300 at times either. So you have to be ready to hold on, but ultimately, in a month or so, we may turn back down again, and you have to be ready for that. So join the free trial. It's a free trial. Free is for me. Take the 7-day free trial of the Research Center, the Intraday Stock Chat. Get involved in this market because there's money to be made if you know what you're doing. And that's what we're here for. We're going to give you trades. I'm giving you all my trades. All right, I moved out of Cisco with a nice little gain. All right, in addition, I got Juniper. What's Juniper doing today? That's another one I gave out to the Research Center. Up $1.50 today. Up $1.50. I'm in the money over $1. I have a break-even stop already in that thing. Beautiful. All right. So again, it's a free trial, 7 days. As long as you cancel before the end of the free trial, you don't get charged. It's that simple. You don't like it, you don't get charged. No big deal. You're done. All right. So it's a no-brainer in my opinion. In any case, folks, let's get this party started. Continue to make money here. I don't care what the market's doing. There's always going to be a trade out there, and there's always going to be analysis. And I'll teach you guys all my methods, proprietary, everything. Bottom line is, let's join the pros here, guys. Come join us. We do a lot of analysis for hedge funds. We'll give the same analysis to members here at In the Money Stocks. It's the same thing. We're not going to hold anything back just because they're a hedge fund. We'll make them billions. We'll make you millions. All right, take care, guys.